Okay, today we are considering why your demand and supply zones fail. Why your demand and supply zones fail, part 3. And this is going to be the last video in the series that we started about 3 weeks ago. We've made 2 videos earlier on why your demand and supply zones fail, part 1, part 2, and this is part 3. Do yourself a favor by going to view the previous videos so that you can catch up with this. We can be on the same page. Several traders always ask me that why is it that your zones, most of your zones work? Like I was discussing with someone last week, a few weeks ago though, and he was like, most of your setups pass, most of your setups excel and succeed, while mine don't work. Like in the previous year, we won over 90% of our trades. And that is what actually brought up this video, that those questions that you asked me, I'm trying to answer them by explaining to you what you can actually do in order to excel, in order to succeed, in order to win most of your trades, even though this year is still fresh. Okay, we're in the second month of the year. All right, so in the previous videos I said that your demand and supply zones fail. The first one is, number one, is that you are trading against the higher time frame. You are trading against the higher time frame. You are not following higher time frame. You are going against the higher time frame order flow or market structure. The second reason I said was you are entering trades without entry confirmations. You're entering trades without entry confirmations. The third reason I said you're using retail tools. Okay, you're combining retail tools with demand and supply or smart money concept tools, and that causes confusion. Go to the previous videos, you go to see what the explanations via charts in details. Okay, try and view the previous 2 videos I made. They will help you to catch up with what we are talking about. Now the fourth reason I said was you are not paying attention to liquidity pools. You are not paying attention to liquidity pools. And the fifth reason I said is that you are trading inducement. You are trading inducement. You are trading inducements in place or instead of proper zones. You are trading inducements instead of proper zones. You are trading inducement instead of proper zones. So today, these are the previous reasons I've given in the reasons I've given in the previous videos. So today we are looking at 2 more reasons, and that will wrap up this series. And the first reason we're going to give, which is number 6 out of all we've been talking about, is you're not trading fresh zones. You're not trading fresh unmitigated zones. Not trading fresh unmitigated zones or unmitigated. Okay, you're not trading fresh or unmitigated zones. That is the reason. Another reason why your demand and supply zones of your smart money concept traders fail. All right, one big mistake that most retail traders make is that we are trading demand and supply. We are trading them as support and resistance. Okay, you are trading as support and resistance. Demand and supply are not basically support and resistance. They're not exactly as support and resistance. Okay, so they are not. You don't need to trade demand and supply zones as support and resistance, because support and resistance is what you actually learn as a retail trader in your formative years as a trader. Okay, so but they are not. It is a retail concept, and it is not basically demand and supply zones. Okay, they are not demand. Don't trade supply and don't trade support and resistance as demand and supply zones. Okay, because the reason is this. What are support and resistance? Before we continue, this is a support. A support is like a roof of a floor of your building. price is moving this way and bounce up from the top and bounce up from under. So this is your support, this is your resistance. Okay, so several traders would want to, you see here now, taking trades from here is dangerous. Okay, and taking trades, this is what some traders will trade this as a supply zone, while some traders would want to trade this as a demand zone. But this is wrong, because as a smart money trader or as an institutional trader, I'm looking here as a liquidity pool. These are liquidity pool. Okay, these are liquidity pools, and these are also liquidity pools. Okay, the institutions, institutional traders and hedge funds and banks, they are targeting to sweep all liquidity, because when you trade here, you put your stop losses right here. You still put your stop loss right here above this resistance, or your stop loss are below the support. But the institutional traders are looking at wiping all of these, wipe them out. So you taking trades from here could be very dangerous. All right. So for demand, why I say support and resistance is not the same as demand and supply zone. In essence, practically, is because for a resistance, the more price comes to a resistance, the more a resistance zone holds. This is the resistance zone. The more this resistance zone holds, or price respect these resistance zones. In the world of support and resistance, it is taking that this resistance zone is a strong resistance when it has held price for several long amount of time. Okay, so, and when the market has held price for a number of times on this support zone, it is taking that the support zone is strong. All right. So it is taking that this support zone is strong, and this resistance zone is strong when it has held price, when price have come to it several times, and price has respected the zone. But in a world of demand and supply zones, when the more price comes to a zone, the weaker the zone. Let me explain what I mean. For support and resistance, the more price comes to the zone, okay, the stronger the zone. For a demand and supply zone, the more price comes to the zone, the weaker the zone. You need to understand this concept. Okay, for a support and resistance zone, the more price comes to the zone, the stronger the zone. For a demand and supply zone, the more price comes to the zone, the weaker the zone. So this is very important. That is why you don't need to trade support and resistance you don't need to trade demand and supply zones as support and resistance. Okay. Another concept you need to understand with regards to not trading this is that this support and resistance is basically a range liquidity. We institutional traders see support and resistance as range liquidity. All right. Is like a liquidity, is like a zone in a range. All right, it's like a market is ranging. The market is actually ranging. So I told you before, this is a range liquidity. Okay, this is a range liquidity. So price is, instead of when you want to take trades from here, this is likely to fail, because price could, the market makers would want to sweep these stop losses right here, okay, before possibly selling or buying. So this is a range and this is a range. So the market is very dangerous to take trades, to trade demand and supply zones as support and resistance. Okay, so this is what you should be trading. You should be trading bullish order flow or bearish order flow, because rule number one, or the first reason we gave why your demand and supply zones fail is because you are not trading with regards to, you're not taking consideration of the order flow. So you should be trading in a zone. You should be trading a trend. You should be trading along the trend, or with the trend, or with the order flow. You should take into consideration the order flow or the market structure, or which also can be also referred to as trend. This is very, very important regarding where you take your trades. Let me explain what I mean. You should be taking trades in a market that looks like this, or a market that looks like this, whereby the market, this is a bullish order flow and this is a bearish order flow. Here the market is making higher highs and higher low, higher highs, higher low, higher highs, higher low. Here the market is making lower high, lower high, lower low, lower high, lower low, lower high, lower low. This is where you should be taking your trades from. This is where you should be taking your trades from. This is you're taking your buy trades from, buy trades, sell trades, sell trades. Okay. So, but when you decide to take trades from a ranging zone, a ranging market structure, you risk losing that trade because that is a range liquidity. If you have to view my video on liquidity, it's on the link, it's been linked on the description box of this video. Try and view my video on liquidity. Okay, view my video on liquidity. This will help. These are smart money concepts that will help you to excel. These are smart money concepts that took me years to understand and which I have put together, explain them in a simple form that will help you to understand. Please try to view. If you have viewed my video till this point in time, please do well to subscribe to my channel. If you have viewed my video to this point in time, please kindly subscribe to this channel and let us grow. It doesn't cost anything to subscribe. Some of you view my video without subscribing. Please just press the subscribe button. It doesn't cost you anything. Okay, it's something that you can do to encourage me to produce more useful contents for you. Okay, if you have done that, let me know so that we can continue. All right, also give a thumbs up to this video if you find it useful. Give a thumbs up and share this video, share the video with your friends and other traders so that they can learn and grow to become better traders. Do that to encourage this channel, to encourage me. All right, so now the next step, or the next thing, the seventh step, reason why which is the final reason, the last but not the least, why your demand and supply zones fail is that you are trading rally base rally, or demand or drop base drop zones instead of rally base drop or drop base rally zones. I will explain briefly what this means. All right, I will explain briefly what this means. The truth is that all of these zones work. They can work. All of them can work. But what we are talking about here is higher probability. Okay, the rally demand zone and the drop base drop supply zones, they are not as effective as the drop base rally base drop zone. So I'm going to depict it right now for you so that it can be clear. Don't worry, we're going to go into the chart to see these things clearly. All right, so let's see. I'm gonna be showing you just almost soon in the chart. So this is a rally base rally. Okay, this is a rally base rally demand zone. Okay, because this is not going to be a zone. The market is expected to come to mitigate this zone and then buy. Okay, so this is a demand zone. Okay, but this is rally base rally demand zone. Now for the supply zone equivalent of it is a drop rally drop rally drop supply zone. In the sense, this is a supply zone, so the market is expected to come to the zone and mitigate the zone and for sell. So this zone, this called rally base rally for this one, and this one is called drop this base drop base drop zone. So this is a supply, this is a demand zone, rally base rally demand zone, and this is drop base drop supply zone. So these zones are not as effective as the two sets we're going to show you right now. And these two sets are the drop base rally drop, base, rally, drop, base, rally zone. This is a demand zone, so it's expected that price should come to this zone and mitigate the zone. Okay, price should come and mitigate the zone. And this one now is rally, base, drop, rally, base, drop. So it's expected that price should come and mitigate the zone. So this zone, this drop, base, rally, and rally, base, drop zones are of a higher probability than the rally I showed you before, rally, base, rally, and drop, base, drop zones. So it will do you well to trade, to look for, if when you are trading demand and supply zones, trade these ones more and ignore the other one. That is not to say that the other zones might not work, but these ones have a higher probability and they work better. Okay, from experience, from thousands of trades, demand and supply zones being analyzed over the years, these ones play out more. They play out more. All right, so let us go into the chart to see these, what I've been talking so far. All right, so this here is rally. This is a rally, base, drop, rally. There was a base formed here, drop. So this is a better, you see the market came and mitigated this zone for a sell. So this is a rally, the market rallied down, came up, formed a base and dropped, and then giving us a zone to trade from. So that is that. Let's look for other one here as well. The market rallied down, formed the base, rallied up, and gave us a zone to trade from, and the market which worked out. Okay, here as well, this is also a rally base, rally zone, which was mitigated right here. Okay, now I was talking about range liquidity. Okay, so you see here now, this is a supply, this is a support, this is a resistance. Okay, this is a resistance, and this is a support. So you see that at some point the market broke out. This is a liquidity pool. So the institutional traders broke this. Now this trade was taken from here, successful trade taken from here, successful. About two mitigations of this zone. This is the first, this is the zone, this is the PUI. This is trade number one taken from this zone, and this is this trade number one. I would take this trade. Because this is a bearish trade, the bearish order flow or market structure. I would take this trade. This is a fresh unmitigated zone here. Okay, no market have not come to trade from here. This is a fresh unmitigated zone. I would take this trade joyfully, but I will not take this second trade. I will not take this third trade. The mistake that most of you make is that you take this trade, and you also, when the market decides to come back again, you also want to take trade from here. This one is a higher probability, this is a lesser, and this is the worst probability here. Same with this is, but we won't even want to take trade from here, because this is actually a bearish order flow. So taking buy trades here is totally out of it. All right, but some traders will now trade this as a support and resistance. So you see that eventually the market is filled. Those who are wanting to take trades from here, the market did not actually obey it, and the market broke this. So support and resistance are not demand and supply zones in essence. Support and resistance, the higher market, the more number of times the market price comes to a zone for a support and resistance, the higher the zone, the higher the the strength of the zone. But that is totally the opposite for smart money traders and for demand and supply traders, because more times market comes to a zone, to mitigate a zone, the weaker the zone becomes. So we trade fresh and unmitigated. Unmitigated means price have not come to that zone to trade from it. Okay, fresh unmitigated zones. That is what we trade. That's what we look at trading. So that's what you should be trading from. All right. So you can see this is a drop base rally zone, and the market came here and it was mitigated. Beautiful zone. All right. So here as well. But this one now, this is a rally base rally. Okay, you see it also worked, but it's not as high probability than the other one. So this is a rally zone, a demand zone. Okay, rally demand zone. It worked out here, but it's not as of a higher probability that as the other zones, the drop base rally zone, demand zone. Okay, here now you can see the same thing that we saw the other place. I would joyfully, I would joyfully take this trade. I would joyfully take this trade because this is the zone fresh unmitigated. This is a fresh unmitigated zone. I will take this trade from here, number one. But I will not take this trade. I would not take this trade. Neither will I take this trade. Okay, I will not, because you can see eventually this will form a liquidity pool. Okay, a pool of stop losses whereby the institutions are trying to do what? To take out. All right, and here it was rated. This was a liquidity sweep. Okay, the liquidity was swept right there. So this is like a demand. This is a supply zone, valid supply zone. But when its price now comes to this point, it now formed what's it called now? Support, resistance. Okay, this is now a resistance, and this is now support. And I don't trade support and resistance, because support and resistance is basically liquidity pool for institutional traders. Okay, I hope that is clear. So this one is also another one. Okay, here now you can see the market came down here. This is a mini drop zone, and this is a very good trade that was taken from there. And here as well, beautiful. There's even a liquidity pool right here. Rally base drop, and there was a liquidity pool right here, and the market came. This is the kind of setup I like taking. The market came, and so this is a very high probability. This is a high probability setup. Okay, the high probability setup. Okay, see, this is another one to the downside. You see, another one to the downside. Okay, see how the market broke this. This is a liquidity pool, and the market broke this zone. So that is why you don't have to trade demand and supply. You don't have to trade support and resistance zones in form of a demand and supply zone. So here also, this is a drop. This is a rally based drop zone, and the liquidity pool was formed right here. The market came to mitigate this zone and gave a beautiful sell, beautiful one. Okay, here also, this is just a rally based rally zone, but it still worked out. It still worked out though. It still worked out. This one is a rally. This is a drop base rally zone, and the market actually bought from the zone. All right, this is a drop base rally zone. The market bought from the zone. Okay, let's see if we have got more example. This one is a rally based rally zone, and which worked, not of a higher probability bet. It worked out in that case. Okay, so here as well, this is a wonderful zone, beautiful zone, rally base drop, higher probability zone, and the market actually sold from here, and it formed a support zone, sorry, a resistance zone. Okay, from the resistance zone. I would not take this trade from here. I would not take this trade from, even though it worked out, but I would not do that. The best to do is to take the first one and move away and look for another fresh unmitigated zone. Always trade fresh zones. This is key. Fresh zones where price have not come to, price have not traded from, it has a higher probability. It works out more than to trade a zone that price have actually traded from before. This is a rally drop base zone, and you can see the market bought from here beautifully. All right, so that is it basically. So please, if you need me to train you one-on-one, you want me to mentor you one-on-one, I have several people I'm training, several students in my mentees, in my mentorship, and I do one-on-one mentorship. The reason why I do my one-on-one mentorship, as I always say, is that I take this training, the training personally, in the sense that I identify your deficiencies in your trading career and I help to make up for those deficiencies. I train you in a way that you understand, and I also ensure that I give you time at your own pace. So I train people at their own pace. So if you are not yet, if you need me, if you might even be, whether for newbie traders or for old traders that are struggling, if you are struggling to become profitable in your trading career, I can help you. All right, I can help you by doing a one-on-one mentorship course with you, and I strongly believe that after you pass through that mentorship course, you're going to be a better trader, more profitable and more successful trader. So do send me a DM, and my contact detail is in the free Telegram channel, and the link to the Telegram channel is in the description box of this video. All right, so if you're also here to join our free Telegram channel, do so, because I share free setups. There frequently that will help you that you can actually trade at your own discretion, and so that we can all win together. All right, so if you're yet to subscribe to the YouTube channel, please do not fail to subscribe to the YouTube channel. Help us to grow, join us to grow, and give this video a thumbs up if you find it useful, and try to share our videos with your friends. Encourage us to grow, encourage us to do more. All these things I'm sharing for you, I'm doing it for free. These videos are free. I'm sharing these videos free for you. This information, I'm giving you the information that took me years to understand. After several years of pain and struggle until I became a profitable trader, I'm sharing these secrets free of charge for you. So what you can do in return for me is by subscribing to my channel and sharing my contents with your friends, giving our videos a thumbs up. Don't just view and leave. Give this video a thumbs up and subscribe to my channel. If you do that, you are doing well, and you have been encouraged to make more videos that will help you to excel. So new topic soon. So this is the end of this this series. Okay, can we just do a recap? Let's just do a recap. So we said reasons why your demand and supply zones fail. Number one, we said you are trading against the higher time frame order flow. Number two, we said you are entering trades without entry confirmation. Number three, we said using retail tools like indicators, trend lines, etc. You are also not paying attention to liquidity pool. The fourth reason we gave was that you are not paying attention to liquidity pools. Okay, you are trading. Also, number five, you are trading inducement in place of proper zones. Number six, you are trading old zones. You're not trading fresh zones, not trading fresh unmitigated zones. Number seven, you are trading rally based rally zones or drop based drop zones in place or instead of rally based drop or drop based rally zones. So that is actually the 7 reasons why your demand and supply zones fail. So till I come your way next time, do have a wonderful day ahead. Bye.